All right. Let's go ahead and do a Wednesday recap. Okay. Get us all on board, and then we'll dive into what we're looking at into Thursdays. So, in yesterday's newsletter, okay, this is what I'm going to go over first. Is I went over the bigger picture. Okay, and I really want to emphasize this because understanding what the market is doing in the bigger time frames makes it much easier for us and everything from it makes it much easier for us to map out potential scenarios, map out very important levels, support zones, makes it much easier for us to navigate on smaller time frames. Okay, because let's say we this is our bigger picture, right? Daily time frame. Okay, now before we dive into it with a little bit more detail, is when we're zoomed out and we're looking at the markets right away. Okay, what I know is, let me go ahead and take this off. Okay, taking all the levels away, what I know is that my daily time frame is showing me a very big range. Okay, and that range is set from about 70, 77, 70, 18, all the way down to a low of 63.53. So that's a huge range we're working with. Okay, so that's number one. Number two is that about a month and a half ago, the market triggered out of this range, putting the daily time frame in full breakout mode. Excuse me, I'm recovering from a sore throat. So those are two extremely important things to know. Is we identified a huge range on the biggest time frame that we're looking at, and we also know that bulls have triggered the market out of this range, which is which puts the daily time frame in full breakout mode. And in full breakout mode, who does the primary trend belong to? This trend belongs to bulls. So anytime you want to press the red button, or anytime you want to short, you have to keep in mind that that is considered a counter trend trade. Counter trend trades are lower probability trades. Okay, so we're just that's this bit of info we're building off just looking at the bigger time frame. Okay, it's technical analysis 101. Okay, and my best trading moments are simply or simply come from just me sticking with the primary trend. The trend is your friend until the very end. When is the end? I don't know when the end is. Neither do you, or neither does any of the market participants that are, in the markets. No one knows. Okay? And most of the time when you do see someone nail, quotation marks a top, they probably tried it about 50 times before that. Okay, so it's much easier to stick with the trend. All right, so back to what we're discussing is the market is in full breakout mode. Okay, And if we flip back to the other layout that I have, this is our breakout zone. It's our home base. Okay, this is our first real big area of support on any type of drawdowns that we may see. Have that on a sticky note. It's a beautiful area. This is our breakout area, our home. I'm going to refer to it as our home base. So since breaking out or breaking above this home base area, all the market has been doing is trending higher. So if we can understand that, when we flip into a smaller time frame, this makes more sense to us rather than just, you don't prepare or anything and you just jump in and you're like, all right, I'm going to trade. Like, all this right here gets confusing. Okay, all this right here, all this could get you really confused. Okay, so in yesterday's newsletter, that's one of the things I emphasized was I touched up on the daily time frame and hopefully getting us all on board on what's going on. And from knowing this, we jumped onto the 4-hour time frame. Slightly smaller time frame. Okay. And when we're looking at the 4-hour time frame, the 4-hour time frame is already giving us a potential range that we're working with. Okay, in yesterday's newsletter, the upper pivot right here, this is where my crosshair is at, my arrow. The upper pivot here is 75.40. The lower pivot is last week's low at 73.54. This is a potential range that we're focusing on the 4-hour time frame. Now, this is a very important range to know because, number one, like we went over on the daily time frame, we know that bulls are in control of the trend. They have triggered a breakout, okay, from our home base, and over the past month or so, we've just been grinding higher and higher, pushing higher, trending higher, whatever you want to call it. We've been pushing higher. Okay. And heading into this week, okay, the market immediately went to break above the upper part of the 4-hour range. Now, that's very important to understand because to keep bulls in control for this week, okay, it begins with maintaining above 75.40. That's something I talked about. Now, maintaining above 75.40, that indicates to us that the market is maintaining in the upper part of the 4-hour range. Maintaining in this upper part of the 4-hour range is a good sign. However, we want to see some follow through higher. That's the best case scenario for bulls. Okay, now, if the market fails to hold above 75.40, as I talked about in yesterday's newsletter, was getting under 75.40 places the market back inside of this 4-hour range. Okay, that's highlighted in gray. Slipping back inside of this 4-hour range, okay, it shows us that bulls or it shows us that the market's deviating away from the upper part. Okay, and that can potentially show us that bulls failed to maintain control. Okay, and what we're looking at right now, the control is, we want to see the daily time frame. We want to see the daily time frame do what it has been doing over the past month or so, and that's just breaking higher and higher and higher. It's very easy. If we deviate away from that, what we're looking at now is that, and a question pops up in our mind, and it's, is the market looking to enter a consolidation state? And the first wide range that comes into our mind should be this 4-hour time frame. Okay, it doesn't mean shorts, but it means watch your long exposure. Okay, that's still a position that is still considered a very great move. Okay, because if we fail to hold above 75.40, this is going to place the market back inside of this 4-hour range. And the risk here is that if we fail to maintain if we fail to maintain in this upper part of the 4-hour range, the risk here is as low as 73.54. Okay, so what I don't want to be caught in, and I hope other people as well are paying attention, is that you don't want to get caught holding longs here and the market does a full U-turn down into 73.54. That's about 200 points or so. Okay, so that's what I discussed yesterday. Now, if the market does turn around and start to fill out this range, a lot of people are going to talk very bearishly. Okay, but when we're looking at the market from a 4-hour time frame from a 4-hour time frame view, the market in this 4-hour time frame view, if it were to turn around and start filling out this range, it's nothing but considered a consolidation state. A real sell case only begins under 73.54. A breakdown of this range to the downside. Now, that may cause some downturn, but keep in mind when we're looking at the market from the daily time frame perspective, if the market were to start to put in some development onto the downside, it's just a consider bigger pullback to the primary trend. And this is where it's important to understand and know very important zones like our home base. So that's what I discussed in yesterday's newsletter. Okay, and it's very important to understand this range, 75.40 down into 73.54. All right. Now when we zoom in now on an intraday time frame, now we know what's going on. Now we're not getting lost at all. Now we're very well equipped and prepared to take on the session at an intraday view. Okay, we have 75.40 up here in blue, and what we know is that's the upper part of the 4-hour range. The purple level down here is 73.54, the lower part of the 4-hour range, or last week's low. Okay, now we know for bulls to maintain in the driver's seat of the market, we know that we're in the upper part of the range, and we know that they need to maintain the market in the upper part of this range, and not only maintain it. Okay, that's step one. Maintain is step one. We need to see follow through. Okay, that's what keeps bulls in the driver's seat. Now, in yesterday's newsletter, let's go ahead and pull it up. Where is it? I had it here somewhere. Boom. Okay. In yesterday's newsletter, um, I discussed that the best case scenario, obviously begins at getting back over 75.40. Getting back over 75.40 indicates bullish intraday strength for the session. Okay, I mentioned the first setup that maintaining above 75.40, quick longs can work as a breakout trade setup. And above 75.40, we're targeting two very specific targets, 75.55 and most importantly 75.69, which is this current week's high, the holiday high. Okay, and in the overnight session, bulls maintained very well above 75.40. We pushed up, tested 75.69. Okay, we tested 75.69 and we got rejected, which put us right back at 75.40 into Wednesday's cash session. Now, I talked about this, is what happens if we get under 75.40. Unable to maintain above 75.40, avoid longs as the risk is set on the market expanding into Tuesday's cash session low at 75.17, which is serving as Wednesday's short sell trigger. Okay, so 75.17 for us, was a short trigger. The big thing to understand here, okay, 75.17, boom. Okay, we know on the bigger time frames, we know the 4-hour range. Okay, that's very important to know. We already went over that. And we know that we're hanging out in the upper part of that 4-hour range. 75.17, as I mentioned, where is it? I mentioned that it's serving as Wednesday's short trigger. Now I said breaking under 75.17 triggers a breakdown and most importantly signals market weakness for the session. If sellers manage to get the market below 75.17, this also signals to us that the market failed to maintain value in the upper end of the 4-hour range. Okay, and what happens if we fail to maintain in the upper part of the 4-hour range? It puts the market in a consolidation state on the 4-hour time frame. If 75.17 fails, you avoid the green button. It was clear as day. Okay, so if 75.17 were to fail, that was our signal that the market is looking to fill out that 4-hour range. Okay, I'm a trap trader, and that's what I look to exploit. 99.9% of the time I'm in the market. That's the main setup. Okay, I mentioned it here. Said, as readers know, I'll stick to my bread and butter, that is failed breakdowns. So failure to maintain above 75.40, the first enticing area I'll be watching for a potential setup to trap traders and engage long is no other than at the short trigger 75.17. Engage longs only via failed breakdown setup at 75.17 if the opportunity presents itself. Okay, and if we zoom in at the cash open, the market eventually fell to hold above 75.40, which set up the market to test 75.17. Perfect support. We got a nice bounce off it. We got rejected at 75.40, sending the market back down into 75.17 and spiking under 75.17. Short traders got trapped right here. Buyers stepped in. It kept the market above 75.17. These two right here were long entries. Longs worked at 75.17 and gave us a great rally into the end of day. Okay, about 30 points or so. So very easy setup. It took patience. Okay, a lot of people will, are looking like, hey, the market's selling. They go ahead and chase that. They short at the short. They short at the support. They get trapped. Short at the support. They get trapped again. It's easy money. Just trade the traps. Okay, they got trapped. All right, so very easy setup for Wednesday. Now into Thursday, I'll touch up onto it, but I'll send the update in a few. Nothing has really changed. Okay, the market's on an intraday view holding from 75.15 into 75.70. Market's still holding within this small range, but remember, this range here is in the upper end of the 4-hour range, which is this one right here. Okay, so best case scenario for bulls is we continue to maintain above here, and we need to see some follow through excuse me, above 75.69, get a full breakout going. The only time I'm looking to avoid longs is if we break Wednesday's low and actually maintain underneath it. I'm going to be cautious. I'm going to avoid longs because under 75.15, it just places the market to trade back inside of this 4-hour range. Okay, very easy. Let me see, 75.15 now. That's the sell trigger for tomorrow. If we break under here and can't recover it, that is our sign to avoid longs because the market has entered a consolidation state. All right, so I'll go ahead and release the full update for Thursday in a little bit, but so far here's a recap, very well detailed, so and really paints the picture on basically what we're looking at into Thursday. Not much has changed. Okay, daily time frame, for bulls to maintain control of the week, they need to maintain in the upper part of this range and look for follow through. That keeps them on the wheel. Okay, if bulls fail to maintain in the upper part of this 4-hour range, our confirmation that the market is turning around, at least for the week, is on a breakdown of 75.15. That means break and maintain. Breaking under 75.15 is our sign that the market may enter a consolidation state on the 4-hour time frame. Okay, and if the market does so, the lower end of this range is our higher probability area to look to re-engage longs. Okay, it's very easy. Okay, it's as simple as that. And when we're looking at the daily time frame, we got a breakout above this area. We trended. If we do enter a consolidation state, it's very normal to see, guys. The market does only two things. That's trend and consolidate. We got a powerful trending move on the daily time frame. If we get a consolidation state, it's right here. It's a nice pause to this breakout move. The only real downside that I see on bigger time frames is getting under 73.54. That would only signal a pullback to us. Okay, and we start looking at very high probability areas to re-engage, but we're very, very far from that. But I always keep a sticky note in my mental because I don't get caught. I don't get surprised. Okay, gotta be, like Doctor Strange in the Avengers. When he's going crazy, look, moving all crazy and looking at all the possible millions of probabilities that can happen. That's us. Okay, and even though we're far away from this one, keep it on this mental sticky note. Okay, so hope this helps.